Thursday, January 6, 2022, Maneco 64, home of alternative economics and contrarian views. We're going to go back to the bond market today. We spoke about how yields started spiking on the first day of trading in the US, Treasury yields. A lot of European markets were closed on that day. And now, though, all global bond markets seem to be on the back foot, and that's a bad thing for all economies. That means the cost of credit is going up. And we're going to talk about today what the FOMC minutes came out with yesterday. Before I do that, I'd just like to say that outside the markets, more into what's going on out there in the world, I think things are getting more and more wacky. What's happening in Australia is getting pretty crazy. I saw that in the Northern Territory. Michael Gunner, that guy with the crazy eyes, apparently is put on a lockdown order for unvaccinated people from 1 p.m. that they can only go out for certain things, and that they can't go out further than 30 kilometers from where they live. We're seeing in Europe as well. It's almost like living in the Twilight Zone, what's happening in Europe. I see that the Goldman Sachs Prime Minister of Italy, Mario Draghi, Goldman Sachs, ECB, yeah, Italy unfortunately is under the control of the bankers. I guess like many other countries, but it's more blatant there. He's saying now that he's going to mandate the jab for over 50s. It's going to be mandatory. What else? I mean, it's just crazy what's going on. We saw the president of France saying that he's going to emmerder, which means to piss off unvaccinated people, to make their lives harder, to force them this medical procedure. I mean, these guys must be desperate, or there's something that we don't know that's going on in the background. The people who maybe really run the world, these guys are just puppets and they're just following orders. But it's a crazy world, and in a crazy world, what do? Well, we try to batten down the hatches. What do you do when there's a storm? Batten down the hatches, keep your head down, I would say, and try to do the best you can with what you've got, and survive to tell another story on another day, to start again. I think that's where we are right now. I think the markets, yes, they're really interesting, but they're becoming an irrelevance, I think. That's the way I feel right now. Things are very crazy, and yes, I think people, at least for me, I want to have a safe haven, which is where I am, and I want to have access to real things. So think about that as well. I've seen some photos of supermarkets in Melbourne. I have a follower who sent me some photos. They're getting empty in Melbourne, Australia. I don't know where you live, how things are going, but I think we could have maybe shortages soon. And the energy situation isn't getting any better either. So now back to the bond markets. That's just a little bit of a, you know, the way a rant on what I think is going on out there. And I think I'm not judging anyone, but I'm standing my ground. And I think this is a fight between good versus evil. And am I saying the people who are accepting all this are evil? No, I think the people who are imposing it are. And unfortunately, a lot of people are falling for it. But yes, and trying to stay outside their financial system is the best way, in my opinion, to try to fight them. Because if you are in their financial system, you're financing them. So, yeah, yesterday the FOMC minutes came out around 7 p.m. London time or 2 p.m. New York or Eastern time. And we saw the markets kind of get hit. We saw precious metals come off. Am I concerned about precious metals, paper prices? Not really. When you see that the world is so crazy, I don't want to get rid of those gold and silver, physical gold and silver that I've been able to, for over the years, stack through effort, gold and silver that has kept their purchasing power. No, I don't want to get rid of that. And the most important thing about having assets outside the system is counterparty risk, because if we get a credit event where you get a lot of bankruptcies, like in China, we're seeing that. You don't want to have exposure to counterparties to the financial system. But what it looks like happened yesterday is that the Federal Reserve minutes from the meeting in December, took place mid-December. It gives people more of an idea of what they were talking about. Yes, they had a press conference and they released some statements, but the minutes helps you sometimes see what they're thinking. And according to some analysts, like Zero Hedge spoke about, like at JP Morgan and other investment banks, the Federal Reserve spooked the market, and maybe they didn't plan to do so. And they spoke about raising rates much sooner. I think most people expected them to be raising rates more towards the second half of this year. But just again, the other thing, the Fed keeps talking about becoming hawkish, but they haven't really done it yet, because they're still doing QE and rates are still near zero. So, but be as it may, so the market seems to think they're going to start raising rates sooner rather than later. And the other thing that's really significant that JP Morgan analysts and Goldman Sachs analysts saw is that they're planning actually to unwind, to run off the balance sheet much sooner, like in 2022, which would be, as Zero Hedge concluded at the end of their article, well, they would have to start buying everything if they're going to do that. Because as you can see here on this chart from the Fed's balance sheet, they only started unwinding the balance sheet after the '08 crisis, about 10 years after the '08 crisis. As you can see here, back in 2018, the balance sheet started dropping off. And then by the middle of 2019, all hell broke loose, of course. We had the repo crisis in September, and they started doing not QE again. They called it not QE to help the repo market. And then lo and behold, well, not last year now, but March 2020, the balance sheet went through the roof, and it's continued to go up at a pretty fast pace. So to think that they could already start unwinding the balance sheet this year, I think it would completely decimate the whole financial system, the economy. Maybe they want to do that, and even if they do that, do I want to get rid of my tangible assets outside the system, even commodities? No, I don't. Yes, commodities, gold and silver, the paper prices might get hit hard in the next few months if they really do that, or maybe the market is misreading what the Fed said, in the minutes, and they could come out and try to calm things down. But I think things are getting very interesting in terms of the markets and in terms of the real world as well. As I said, I think we need to keep our heads down, our feet firmly on the ground and live in the real world. All this stuff about metaverse as well. And I know technology is not a bad thing, but I think it's going too far. I think we need to try to avoid that. And anyway, it's pretty cold out today. Billy and I went out. There's a frost on the ground. I think it's about freezing, which for some of you is not that cold. I know in some places in the US and Canada it can get really a lot colder, but for here it is. But it's a beautiful day. At least the sun is out. I think December here, we only had like 22 or 23 hours of sunlight. It was quite dark, so it's good to see the sun out and blue skies. So it's 10 to 9 a.m. London time. So before we look at the usual rundown of gold and all the other assets, let's look at the bond market first today, because that's where the action is pretty interesting, I would say. We started the year just above 150 in the 10-year. And then, yes, on the first day of trading this year or this week, the 10-year yield rose 13 basis points to 163. And then the next day it went up to 168. Yesterday it kind of stabilized, but went up to like 170 after the FOMC minutes, and now we're at 173. So it's up another 3 basis points. So not good. We're breaking through the highs of October and November. The high of last year, we're very near. That's 1.77. So keep an eye on that 1.77. I would say if we break that, we could very quickly be at 2%. And also the German 10-year yield, let's have a look at that. The Bund, which is, yeah, a market I'm very familiar with. I traded this market for many years, traded a lot of Bund futures as well. I remember when the Bund yield was above 6% back in the mid-90s. Now we're approaching zero, but from around minus 40 basis points until recently, until December last year, 2021. Today, the 10-year Bund yield is around, right now, around minus 6 basis points. As you can see by this chart, it's rising quite quickly. That's the important part. I know it's negative, but it's the highest level. Let's have a look here since actually June 2019. So this is bad news for Europe, especially with what's going on in their economies. But I think investors are waking up to the fact that how can you have negative yields when CPI in Germany is running at 5%, their PPI is running at 30%? It doesn't make sense. Italy as well. Yeah, we're approaching 130, the Italian BTP yield. That is not a 2-year high, but it's a 1-year high. Right now, the BTP is up about 6 basis points at 1.3%. Used to trade the BTP futures a lot as well. And I remember when yields in Italy were double digits in the early 90s before Italy left, well, joined the euro. And in the UK, it's the same story. We're seeing the 10-year yield, the gilt, up 4 basis points at 113. I think the key level here is going to be around 122, 125. And we've come from around 0.7 in just a few weeks. So the problem with government bond yields going up like that is that they are usually the benchmark yields for the underlying markets like mortgage-backed securities, corporate bonds, municipal bonds, whatever other bonds there are, and that and those other bonds, their yields will go up even more because they are not supposedly as safe as government bonds. And when bond yields go up, it means that the cost of financing goes up for the whole economy. So I don't think the rising prices are gonna stop, because our economies in the West or everywhere around the world are so financialized and based on cheap credit that if credit starts going up in costs, it's going to create even more problems. You could see a lot of problems. So let's get to the usual rundown here. Now it's 5 to 9 a.m. London time. So spot gold is down $15. We're at $17.96. Right near the lows. The high's been $18.12 overnight. As I said, I'm not concerned at all. I think it's going to be harder and harder to get real gold and also silver, despite the fact that silver is being hammered here. It's down 57 cents at 22.22. Paper silver, that is, because you would find it very hard. You would find it hard to find people out there queuing to sell their real silver. If anything, silver supplies are dwindling on COMEX. They're getting very low, I would say. So yeah, silver's down 2.5%. The low's been right here around 22.20, high 22.84. The Dow futures up 20 points. The NASDAQ futures down 12. S&P is down 1. Yes, yesterday we saw a big move lower, especially in the NASDAQ. NASDAQ lost over 3%, 522 points. And I think the stock markets are going to remain under pressure here. We're seeing the FTSE also get hit hard. It's down 55 points, 0.75%. And the currencies, we're seeing the dollar fairly strong versus the pound and the euro. The pound is down about 0.5% at 134.97. The euro is down about 1/4 at 112.90. But the dollar is actually down versus the yen. It's down 1/4% at 115.80. It's a little bit confusing, topsy-turvy, the FX market. The dollar is fairly strong against the yuan this morning. It's up 0.1% at 638. To the other currencies here, we're seeing the Aussie dollar down about 1%. So that's a bad sign as well. When you see the fiat currencies get hit hard versus the fiat dollar, yeah, that's not a good sign for the overall health of the global financial system. Does that mean that you need to be in the dollar? Well, it looks like they want to keep you in the dollar, doesn't it? Because they're fighting hard to keep Treasuries from getting sold off. But I don't buy into it. And as I said, I don't want to finance Brandon and Boris. If you do, that's fine. So yeah, Aussie dollar is down 1% at 71.52. The dollar is up 0.4 versus the Canadian dollar at 128.03. And the Kiwi dollar, the New Zealand dollar, is down about 0.8% at 67.41. So now we'll wrap up and we'll look at the commodities. WTI crude, you'd think WTI crude would be getting hit hard, but it's not. It's only down about 0.1%. It's still at 77.50. High-grade copper is down about 1.8% at 433. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.